Hi, welcome back to class. Today we're going to start to talk about transactions. This is going to be a key feature throughout the entire course because as a bookkeeper, a lot of our responsibilities are how we handle our business transactions. So what I'm going to do is I'm going to skip over the discussion on our lecture materials, but I'm going to go to the visuals and try to explain those to you, and hopefully this is going to help give you a little bit better idea of how these transactions work in conjunction with a variety of our accounting statements and the issues that we're going to be dealing with for the rest of the semester. Now in our first visual they start to talk about the fundamental accounting equation of assets equal liabilities plus owner's equity. And the real transaction analysis rules that you see here is every transaction affects at least two items, and every transaction must result in a balanced equation. What that means is that the numbers involved must be equal. Every increase is realized with another increase of the same amount, or every decrease is realized with a decrease of the same amount, so that the transactions are always going to be balanced. So we move over to our picture right here that you will see in your visuals for our discussion on Chapter 2, and you start to take a look at one. You have four different options that can occur in a transaction. In one case, you can have an asset go up, in which case you're going to have a liability or owner's equity account go up also. In another case, you may see an asset go down, and in the same instance, you're going to see the liability or owner's equity account go down. In the third type, you're going to see that maybe both of the accounts involved in the transaction are assets, in which case you're going to have an increase and a decrease of two different asset accounts. Or you may have the same thing happen in your liability and owner's equity area. You're going to have an offsetting increase or decrease with no impact, in this case, on an asset account. So now you can start to get a little bit better feel of what starts to go on in our transactions. Now we're going to be discussing during our semester accounts that are going to be considered asset accounts, liability accounts, owner's equity accounts, or then we're going to toss in revenue as well as expense accounts. And those are going to impact, in the end, your owner's equity. And let's see how that works. Because in the next issue, next visual we have here, you can see that if your revenues are greater than your expenses, which is what we like to see, you have a net income. Or if your expenses are greater than your revenues, you're going to have a net loss. These accounts appear on your income statement. These are your revenue and expense accounts. Now what happens when you determine if you have a net income or a net loss is that those figures then move on to your statement of owner's equity. And this is where you start to see the values that occur in your owner's equity accounts. And so you can see how your statement of owner's equity starts to talk about the owner's investment for that period, and you add in your net income, or you deduct your net loss from that owner's investments over the period of time. You subtract any owner's withdrawals, and that's going to give you the ending owner's equity balance, and that's going to be like your capital account. And that's going to be how you determine your statement of owner's equity. So you have your beginning owner's investment or beginning capital account, add in net income or deduct net loss, subtract out from that any owner's withdrawals that occur during the period, and that gives you the ending owner's equity amount. You then move that ending owner's equity account down to your balance sheet. And on your balance sheet, you show your assets equaling your liabilities plus your owner's equity. So in each of our cases, you're going to see that you have your revenue and expense accounts appear on your income statement. And then if you have a net income or net loss, that figure moves down to your statement of owner's equity. You determine your ending owner's equity amount, and that figure then moves down to your balance sheet where you're going to have your assets showing along with your liability accounts and your ending owner's equity account. amount. So I hope this has helped explain our visuals for Chapter 2. Keep in touch and be sure to let me know about any questions on this or any other course topic by sending me a private message within the course site. Talk with you next time. Bye-bye.